My voice is audible? Any comment in the our session part? My voice is audible or not?
Yes.
Okay. So today we are going to start the new chapter, and the new act is known as a FEMA. FEMA, Foreign Exchange Management Act 1999. And this is the most important act as far as examinations are concerned, because in the examination, examiner will ask minimum 10 marks question from this topic, that is called FEMA. This is the most what we can say, this is the most smallest act as far as CA final syllabus is concerned, but little bit complex is also there. Okay, so we are going to start the FEMA part. First point is FEMA. So what is the effective date? Effective date, you need to remember that effective date. So for FEMA, effective date is 1st June 2000, right? Act came in 1999. 1999 is the year of enforcement, and the effective date for this FEMA Act is 1st June 2000. So that date you need to remember. Before FEMA, there is an act called FERA, Foreign Exchange Regulation Act, and that act is 1973 Act. So earlier we are regulating the foreign exchange, means we are not providing so much of foreign exchange for the purpose of importing any item. But after the LPG, liberalization, privatization and globalization scheme at the time of Finance Minister Manmohan Singh, at that time they changed the word regulation to management. Right, so Foreign Exchange Management Act is there, so that is called management. Okay, so foreign FEMA will FERA is replaced by FEMA, and FEMA is most important topic when we are talking for the foreign exchange transaction. Now, what is the object behind introduction of this act? So there are simple two objectives behind. First is it facilitates external trade and payment, right? So this is the objective behind introduction of FEMA and the repeal of FERA Act. Like it facilitates, it needs to provide support to the import and export. So it facilitates external trade and payment. This is the first point. Second, for promoting the orderly development and maintenance of foreign market in India, right? So this is the basic objective behind the introduction of FEMA 1999. Now, from this first chart of FEMA, this is the most important concept. This is the most important concept. Just a minute. Okay, this is the most important concept, like applicability of FEMA. So the first point is that FEMA Act applies to whole of India. FEMA Act applies to whole of India. There is no exclusion, nothing else. First point. Second, that act applies to all branches, offices, agencies outside India. Remember one thing, right? FEMA will attract when one thing in India and some other thing will be outside India. Like suppose the two persons are executing a transaction, that one person should be a resident in India and other person should be outside India. Say for example, one person is in Mumbai and second person is in Agra and they are executing a transaction. In that case, FEMA will not apply. Remember this thing, right? So first point is whole of India. FEMA applies to whole of India. Second point is it applies to all the branches. It applies to all the offices, all the agencies that are situated outside India. But the most important point, but that branches, offices, agencies that are situated outside India, owned or controlled by a person resident in India. Now, this is the most important word as far as FEMA is concerned, or we will see the definition of PRII. We can recall that word as a PRII, person resident in India. So what they have mentioned that FEMA applies to all the branches, offices, agencies that are situated outside India, but that are controlled by the person resident in India. Like that same concept applies to income tax also. Like if a person resident in India or the person who is a resident as per the Income Tax Act, they their global income will be taxable in India, right? So this is the same concept. So first point is FEMA applicability. It applies to whole of India. This is first point. Second point is it applies to all the branches, all the agencies, all the offices that are situated outside India, but owned or controlled by a person resident in India. In that case, FEMA is also applicable. Now, third point is most important. Suppose if a person committed any contravention, if a person committed any contravention committed outside India, that person committed contravention outside India by a person to whom this act applies. It means, suppose for example, I am a resident in India, I am a person resident in India as per the definition as prescribed under the FEMA, and uh, so the FEMA is applicable over me right now. Now there is a, suppose I visited to some place outside India, and at that place I have done any kind of contravention which is prescribed under the FEMA. So for that FEMA is also applicable. So third point is any contravention committed outside India by any person to whom this act applies. So these are the three cases in which FEMA will be applicable, right? First point is whole of India. Second point is all the branches, offices, agencies that are situated outside India by a person and that is controlled by a person, owned by a person resident in India. And third point is any contravention committed outside India by any person to whom this act applies. So in that case, in all the three cases, FEMA 1999 will be applicable, right? So this is the first chart with respect to applicability of FEMA, or we can say that applies to basics or introduction of the FEMA. Now, move towards the theory part. You will find the FEMA notes as well as charts on the ICAI portal. I think so. First concept is clear. Now, moving towards the theory part, introduction part. Need for the act. Why we require that FEMA for this purpose of regularization? First, the change in the economic scenario, globalization of capital, free trade across the globe necessitated the need for managing foreign exchange. We need to manage the foreign exchange. We are not going to control that foreign exchange. We need to manage that foreign exchange in the country in an orderly manner. Okay. So this is basically theoretical point. Second point, to facilitate cross-border trade and cross-border capital flow, exchange control laws was required. This is the second point behind the introduction of the FEMA. Foreign exchange control lead to introduction of exchange control law through defense of India rules by the Britishers in 1939. They have created some British laws. Subsequently, Foreign Exchange Regulation Act FERA was enacted in 1947, which was later replaced with the FERA Act 1973. So earlier there was also FERA. Then again they replaced the new act that is called 1973 FERA Act. Then they replaced the FEMA Act. This is the current law. The act has been effective from 1st June 2000. Okay, FEMA came into force and effective from 1st June 2000. That this act enables management of foreign exchange reserve for the country. So it manages the foreign exchange, that is balance of trade, balance of payment, and dollars availability. What are the features of this act? So these are the basically theoretical points. First point is regulation of transaction. Now this is the important point between a resident in India and a non-resident in India, right? So FEMA is going to regulate the transaction. Whatever transaction is entered between two persons, first person is resident in India, second person is non-resident in India, then you need to comply the FEMA provisions. This is the first point. Second, if a non-resident wants to make any investment in India, or overseas investment by a resident India, means Mr. John wants to invest in India or Mr. Ravi wants to invest in America, then again they need to comply the FEMA part. Third, freely permissible transaction on current account subject to reasonable restrictions that may be imposed. Now there are some current account transactions as prescribed under section 5 of the FEMA Act. So that transaction they need to regulate. Sir, what type of contravention? Abhilash, there are contravention like, suppose for example, I entered some transaction with some non-resident. Then, so I will realize the foreign exchange. That foreign exchange, I need to, as soon as possible, I need to keep that foreign exchange with me outside India and need to repatriate into India within a specified time period as prescribed under section 7. That is called export of goods and services. So if I fail to repatriate that foreign exchange into India within the prescribed time of 9 months or 15 months, then there is a contravention part. And again, there is a section 5 defines for different types of current account transaction. Some are prohibited, some are allowed with the approval of central government or by the approval of RBI. And if there is any default, this is also a contravention. I think so, Abhilash, your doubt is clear. Okay. Moving forward, RBI, central government control over the capital account transactions. Okay. Requirement for realization of export proceeds or repatriation. Repatriation means, say for example, repatriation means bringing. Now, if the word is repatriation to India means bringing to India, dealing in foreign exchange through authorized person. Now, who is an authorized person? Authorized person is a person who is authorized by Reserve Bank of India to deal in foreign exchange. Correct? I think so. That doubt is also clear. Okay. Like for example, authorized dealer, money changer, offshore banking. The definition is prescribed under section 2C of the FEMA Act. Adjudication, compounding of offences, section 14 is there, section 16 is there, and section 15 is there for compounding of offences. Investigation of offences by Directorate of Enforcement, and appeal provisions are specified under the FEMA. That is called Special Director Appeals and Appellate Tribunal part. Now, RBI exercises the control over foreign exchange transaction enforcement of FEMA, but for the enforcement part, they created a new department that is called Directorate of Enforcement, or we can say ED. ED, we can generally we can read in the newspaper ED part, right? Formed for this purpose as per section 36. So basically, this is the introduction part. Suppose, for example, in the examination part, maybe they will not ask the introduction part, write a short note on the FEMA part, but then too, if you want, you can rearrange some crux point and you can quote in the examination part. So I think so this is clear. So overall, there are 49 sections under the FEMA Act, but as far as our syllabus is concerned, so ICAI, they have not included all the sections from section 1 to 49 in our syllabus. So whatever sections are in our syllabus, that we will going to read. Now, preamble part. The Act aims to consolidate and amend the law relating to foreign exchange with objective. First point is facilitating external trade and payment. This is the first objective, preamble of this objective, and for promoting the orderly development and maintenance of foreign exchange market in India. Section 1. It extends to whole of India. First point, right? Second point. In addition, it shall apply to all branches, offices, agencies that are outside India, owned or controlled by a person resident in India, right? And also to any contravention thereunder committed outside India by any person to whom this act applies. The scope of act has been extended to include branches, offices, agencies outside India. The scope is thus wide enough because the emphasis on the word owned or controlled. Contravention of FEMA committed outside India. This is the point, right? by a person to whom this act applies also covered by the FEMA. This is the important point. And FEMA came into force, it's effective from 1st June 2000. That date you need to remember, right? So I have completed my first chart and introduction part and applicability part of FEMA. Is there any doubt? Then we can proceed towards the definition part of FEMA. Okay, so is there any doubt in first chart of FEMA with respect to applicability part? With respect to applicability of FEMA, FEMA applies to three persons. First, whole of India. Second, any branches, offices, agencies that are situated outside India but owned or controlled by a person resident in India. And third point, if any person has committed any contravention to whom the FEMA Act applies, then that person also need to follow the FEMA Act, right? So section 1 is clear. Section 1 talks about the applicability part, and there are some points with respect to the introduction part in the FEMA. So I think so that part is clear. Then I can move towards next concept. That is called definition part under the FEMA. Then I can move towards next part, definition part of FEMA. Voice is audible, everything is perfect. FEMA first section is complete. Is there any doubt in section 1 of the FEMA Act? Okay, now we are moving towards the section 2, and the section 2 talks about the definition part under the FEMA. In charts, I have covered the important definition which are most important with respect to examination part, and in the theory note we covered all the definition as prescribed under the FEMA concept, right? Okay, so moving towards the first definition. First definition is authorized person. You need to remember the section also of this authorized person, right? Okay, so authorized person as defined in section 2 clause C. This is the first point. Correct? Okay. Yes, that applied to Microsoft also, because they are making any transactions, right? There is an import of service, export of services also concept. Authorized person. So there is a definition of this is the first important definition is authorized person. So section 2C you need to remember. So authorized person means an authorized dealer. First point is authorized dealer is a part of AP. AP means authorized person. Second is money changer. Third is offshore banking unit. Banking units which are located in SEZ area that we can call as an offshore banking unit, or any other person who is authorized under section 10. Abhilash, wait. We just completed section 1. Don't worry, FEMA will be more easier than anything via the charts only. Okay. So first definition is authorized person. So section 2 talks about the authorized person. It includes 4 parts. First is authorized dealer, AD. Second is money changer. Third is offshore banking unit. Offshore banking unit means banking units located in SEZ area, special economic zone area, or any other person to whom RBI is going to authorize. And the section actually we need to remember the section 10. Section 2 clause C talks about the definition part of authorized person. Rest of the whole concept lies in section 10 only. Okay. So section 10. So section 10. So now you can remember the section 10 very well easily. Like you need to count the words as mentioned in authorize. How many alphabets are there in authorized? How many alphabets in authorized? How many alphabets in the word authorized? How many alphabets? Let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is section number 10, right? So there are 10 alphabets in the authorized word. So that's why the lawmakers put the section 10 over this authorized person. Okay, moving forward. Now, so authorized person as defined in section 2C means authorized dealer, money changer, offshore banking unit, any other person who is authorized by the RBI, who deals in two part, either foreign exchange or foreign securities, right? Other than two parts like foreign exchange and foreign security, there is no third word is available with deal with respect to FEMA applicability. Either you are dealing in the foreign exchange part or you are dealing in foreign securities, right? There are, I think so, all the transaction will classify either in foreign exchange or in foreign securities, right? For example, you are making investments, that is called foreign exchange. I think so, Kumar, Udit, yeah, 10. So authorized word is 10, so section 10 is there, right? You need not to remember, you need not to recall again and again, okay? And you will not forget in your life also. Okay, so this is the first definition. So authorized person defined under section 2C. Authorized person includes four persons. First is authorized dealer, second is money changer, third is offshore banking unit, and third is any other person who is authorized under section 10 to deal in two things. First is foreign exchange or foreign securities, right? So I think so we completed the definition of authorized person. Okay, with respect to theory notes definition part, the first definition is adjudicating authority. Okay, so that is prescribed in section 16. This definition is not at all important for examination part because we will read in detail this part. Appellate tribunal as defined in section 18. So they simply refer the section number in this definition part. So authorized this is the important definition. First definition is authorized person. Means an authorized dealer, money changer, offshore banking unit, or any other person for the time being authorized under section 10(1) to deal in either foreign exchange or foreign securities. So this is the definition of authorized person. Okay, moving towards the next definition. And next definition belongs to section 2E, and section 2E starts with the capital account transactions, right? Now remember two things. Basically, in FEMA, there are transactions. We are doing the transactions. Like, for example, what kind of transaction? Suppose I have made any investment outside India, right? Suppose, for example, yeah, or we can say, for example, I bought 10 lakh shares of Microsoft. Now, I made an investment in the shares of Microsoft so that that investment will come in balance sheet part. Correct? That investment will come in my balance sheet part, and whatever dividend I am getting from Microsoft, that will come under my profit and loss part, right? Abhilash, okay. Okay, now remember, this is the most important point. Suppose I entered in a transaction, I bought 10 lakh shares of Microsoft. Touch wood, right? I bought 10 lakh shares of Microsoft. So whatever I made an investment in the shares of Microsoft, that is my investment part, and I will record in my balance sheet. Whatever dividend I am getting from the Microsoft, I will record in the profit and loss part. So whatever item hit your profit and loss account, we can call that item as a current account transaction. You need to remember that difference. That difference will always remain in the FEMA part. And whatever item hit my balance sheet part, that item we can call as a capital account transaction. Right? Current account transaction, capital account transaction. I think so that both difference is clearly very clear, right? So if I entered in two types of transactions, suppose I bought 10 lakh shares of any company, or I bought any property outside India, or I took any loan from outside India, that all item will reflect in my balance sheet part. So whatever item hit your balance sheet, that item we can call as a capital account transactions. correct? And whatever item hit my profit and loss account, that item we can call as a current account transactions. Okay, so let's start the capital account transaction part. Okay, so section 2E deals with the capital account transaction. Means a transaction which alter means change, which alter means change. It means, suppose I invested in some equity shares of a company. Later on again I invested some 2 lakh rupees in the equity shares, so that my assets figure get altered. Or in respect of loan part, so that is also get altered. So capital account means a transaction which alter the assets or liabilities, including contingent liabilities, asset liabilities, contingent liabilities, with whom? Outside India, of a person resident in India, that my assets liabilities of outside India get altered. So the transaction which is with respect to alteration, that is called capital account transaction. Or assets or liabilities in India of a person resident outside India. Remember one thing, while entering into any transaction under the FMEA, one person will reside in India and something will happen outside India. Either the person outside India, either the transaction outside India, either the property situated outside India. So this is the capital account transaction plus some other transaction as prescribed under section 6 of the FMEA Act 1999, right? So this is the my simplest definition of capital account transaction. So section 2E deals with the capital account transaction. Okay. Now going towards the theory part, capital account transaction means a transaction which alter the assets or liabilities, including contingent liabilities of outside India. Means that assets, liabilities, contingent liabilities arises outside India of a person resident in India, Mohan, or assets or liabilities in India of a person resident outside India. Ricky pointing, right? Including a transaction referred to in section 6 clause section 6 subsection 3. Definition is prescribed in section 2 clause E, right? So I think so that definition is also clear. Capital account transaction, the definition, both the definitions are clear, or is there any doubt? Then we will move towards, right? Towards the definition of currency. Is there any problem in definition part? We completed 2 definitions, and both the definitions are important definition. First is authorized person, second is capital account transaction part. Is there any problem? Is there any problem? Is there any problem? You need to respond. Is there any problem, Vivek? Is there any problem? No problem till now. Okay, Udit, let's move forward. Currency. So the definition is prescribed in 2H. You need not to remember the section of that currency, right? So currency includes whatever amount, whatever figure came in your mind with respect to money term that we can call as a currency, like currency notes, postal order, money order, check, draft, letter of credit, bill of exchange, any other instrument is notified by Reserve Bank of India, we will classify into currency part, right? So this is the definition of the currency in theory part. So currency includes all currency notes. Currency includes all currency notes, postal notes, postal order. Now, what is currency notes? So that is also defined in the form of cash, form of coins or bank notes. Okay. Money order, check, draft, traveler check. Now, what is traveler check? Traveler check means, suppose I'm going to travel in any country outside India. So I can keep, in spite of that foreign exchange or cash, I can keep a traveler check and I cash with the foreign branch of a bank. Okay, Priya, no doubt. Gita, no doubt. Okay. Bill of exchange promissory note. You already remember that bill of exchange promissory note part, section 4.5 of the Negotiable Instrument Act. Credit cards, other similar instrument as notified by Reserve Bank of India. Section 2H. You need not to remember the definition of the section number of currency. That is called 2H, right? Okay. Currency notice 2I. Again, you need not to remember that part. So we completed the second chart of FEMA, and that talks about the three definition: authorized person, second is capital account transaction, third is currency part. Okay, moving towards the definition part 2, and this is also the most important definition. Without current account definition, don't try to enter in the examinations, right? Current account transaction, section 2J. Okay, so section 2J talks about the current account transaction, and I already told you what are the current account transaction. Current account transactions are those transactions which hit my profit and loss account, or we can say that transaction will be of revenue nature. The most simplest definition as defined, like means a transaction other than the capital account transaction, full stop. So what is current account transaction? Current account transaction is a transaction which is not a capital account transaction. This is the most simplest definition as prescribed under the FMEA Act, but it includes 4 types of transaction which categorize into current account transaction. First point, payment of due in connection with the foreign trade, foreign services, short-term banking in the ordinary course of business. Right? Suppose, for example, if there is any amount due, there is any payment due, that will fall under the concept of current account transaction. This is the first point. This is the first inclusion of current account transaction. Second, payment due as interest on loan. Now this is the most important point. We are not talking for loan. We are not talking for investment part. We are talking for interest on this loan. We are talking for income from this investment, right? So interest or income from this loan or investment, that will be treated as a current account transaction. That green underline, that is called investment and loan, will be treated as a capital account transaction. Abhilash, what nature of the contingent liability can be of nature is like, for example, some foreign customer or some foreign entity filed a suit for breach of contract, right? And there's a case pending in the foreign arbitration, right? Maybe there may arise some kind of claim, so that will be of contingent liability, right? So first point is payment due in connection with foreign trade, services, short-term banking in the ordinary course of business, that fall under the heading, it is called current account transaction. Second point is payment due as a interest on loans and net income from investment, that also falls under the definition of current account transaction. Third point is remittance for living expenses of parents, spouse, children residing abroad, right? Residing abroad, that remittance means the person is sending money to outside India. Okay. Expenses in connection with foreign travel, education, medical care of parent, education, parent, spouse, and children. So that also, that particular transaction also falls under the definition of current account transaction. I think so. Definition of current account transaction is clear. Endorsement means we are providing, suppose, for example, I need some endorsement is a negotiable instrument concept. So it talks about, like, for example, I am getting some amount via check from some person, so or some negotiable instrument or some promissory note or bill of exchange. So I endorse in favor of Mr. X, to whom I need to provide some money because I took some loan in the past. So that is endorsement, transferable, negotiable. I think so. Definition of 2J, current account transaction, is completed. Okay. So current account transaction means a transaction other than capital account transaction, and Without prejudice. Without prejudice means without affecting. The meaning of prejudice is adverse effect. Right? Prejudice is a legal word and the English meaning is adverse effect. And what we have used, without prejudice means without adverse effect. To the generality of the following such transaction, it includes 4 transactions also. First point is payment due in connection with foreign trade, other current business services, short-term banking, credit facility in the ordinary course of business that we can call as a current account transaction. First point. Second point, payment due. Payment due as interest on loan or income from investment that also falls under the current account transaction. Remittance for living expenses of parents, spouse, children residing abroad that also falls under the definition of current account transaction. Expenses in connection with foreign travel, education, medical care of parents, spouse, children. So this is a section 2J of the FMEA Act 1999. So that is a current account transaction. So is there any problem with the current account transaction? So current account transaction are those transactions which are not capital account transaction. It includes 4 transactions also. First point is any payment due with respect to short-term ordinary course of business, short-term banking or with nature to trade in the ordinary course of business. This is a current account transaction. Second point, we took a loan from a foreign country and on which we need to pay the interest. So that interest will hit it as per the FMEA Act current account transaction, and we made an investment outside India and we are earning some income from that investment. That income will hit my P&L account. So that income whenever accrue, that will fall under the current account transaction. Third point is I am sending some money. I am a non-resident. I am sending some money to parents, spouse, children who are residing abroad. So that is also a current account transaction. And why we are reading this current account transaction definition? Because there are some limits prescribed under the FMEA Act in section 5 of the FMEA. And last point is expenses. I have incurred some expenses with respect to foreign travel, education, medical care of parents, spouse, children. So that all transaction will fall under the current account transactions. I think so. That definition is clear. So the definition is clear, or is there any doubt with respect to current account transactions? The definition is clear, or is there any doubt? The definition is clear, or is there any doubt? I try to simplify the FMEA as soon as possible, as much as possible. Yes, there is a limit with respect to current account transaction. Wait for the section 5. Don't worry, this is a very lengthy topic in the FMEA. Abhilash, wait for section 5 of the FMEA. Okay. Other than this, is there any doubt with respect to current account transaction, authorized person, current account transaction, and capital account transaction? Definition: current account transaction 2J, authorized person 2C, right? Authorized person 2C, and with respect to capital account transaction 2E. Okay. Any other doubt with respect to that definition, or moving forward? Moving forward toward next definition, that is called foreign security. Now, the definition of foreign security is prescribed in section 2O, and this is the simplest definition. Yeah. What they have mentioned? Udit, why these limits are imposed on foreign exchange trade? To maintain there should be some kind of more deficit, right? So that's why we are maintaining that limit. All clear, all clear, all clear. Perfect. Okay. Moving towards the foreign security, and this is the simplest definition here, right? What they have mentioned? Any shares. Security means these types of instrument, right? Any shares, stock, bond, debenture, or other instrument. Now, they have used the word foreign. So expressed in foreign currency means that share, that stock, that debenture, that instrument expressed in foreign currency means foreign securities. But their redemption or dividend or interest payable in Indian currency, that's why we are reading this definition. If, for example, that security issued outside India, that security redeemed outside India, why we will read the American FEMA Act, right? So why we are reading the definition? Because one thing is occurred in India means, like for example, that securities belongs to foreign securities means denominated in foreign currency, but their redemption, but their dividend, but their interest payable in Indian currency. That's why we included that definition into foreign securities. So is there any audio problem? Others can respond. Is there any audio problem? From my side is perfect. Is there any audio problem? Or is perfect? Abhilash, now is perfect. Okay, foreign security. So section 2O stands for the foreign security definition part. So this is the our second definition chart. Okay. Now moving towards. So there's a definition called export. Export means, with this grammatical variation, cognate expression means that taking out of India to a place outside India any goods, we can call that as like export, or providing of services from India to any person outside India, that is called export. Foreign currency means any currency other than Indian currency. One of the toughest definition in the world is foreign currency. Foreign currency means any currency other than Indian currency we can call as a foreign currency. Perfectly definition. Okay. Now moving towards the third chart of definition. Now, third chart defines the foreign exchange. Foreign exchange starts with the yes, it will include foreign currency derivative also. That no audio problem. It's perfect. Okay, perfect, Gita. Okay, so now foreign exchange. There is a definition called foreign exchange, section 2N. Foreign exchange means and includes, first point, deposits, credit balance payable in any foreign currency that we can recall, we can fix in a foreign exchange definition. Now, these are the two opposite points, right? So first point, draft, traveler check, bill, letter of credit, bills of exchange, drawn in Indian currency, payable in foreign currency. That's why we included in FEMA part. Okay. Drawn in Indian currency, right? Means they were written in Indian currency, Indian rupees, but payable in foreign currency. So we can recall as a foreign security, or just reverse of the definition, draft, traveler check, letter of credit drawn by a person or a person outside India but payable in Indian currency. So that definition falls in the definition of foreign exchange, right? Foreign exchange definition is simplest one definition, right? So section 2N talks about the foreign exchange definition. I think so that is clear. I think so that is clear. Is there any problem? Is there any problem? Is there any problem? Okay, no problem. Perfect. Now, next definition is section 2U, person. Person includes any individual. This definition is almost same as the income tax definition. Section 2, clause 31, right? Person definition and under the Income Tax Act. Okay, an individual, HUF, company, firm, AOP, BOI, association of person, body of individuals. Every artificial judicial person other than above, any agency, office or branch owned or controlled by such person, we can define under the heading person, right? Section 2U. Now, repatriate to India. Repatriate to India definition falls under section 2Y. Now, repatriate means bringing. Now, if there is a word repatriate to India, means we are bringing some foreign exchange in India. Repatriate to foreign country means we are taking this to foreign country. Okay. Repatriate to India means bringing into India the realize of foreign exchange. Whatever amount we realize by provision of services or by selling of any goods or by anything, by providing any kind of consistency activity. So whatever we realize that realized amount, the selling of such foreign exchange to an authorized person in India in exchange of rupees, we are going to sell the dollars to the authorized person. Authorized person is defined in section 2C of the FMEA Act, and under section 10 there is a concept of authorized person. Okay. Or we can hold that realized amount with authorized person up to as notified by the up to limit as notified by the RBI, so that we can call as a repatriate to India. Means we need to provide that foreign exchange dollar currency to the authorized person in exchange of rupees, Indian currency, and includes use of realized amount for discharge of debt or liability denominated in foreign exchange, and the expression repatriation shall be constructed accordingly. Now, what is the meaning of this paragraph? It says that, suppose for example, you earned $10,000 from America. For earning that 10,000, you incurred $2,000 liability outside India. So what you have done, out of 10,000, you just repay that 2,000, and for rest remaining 8,000 that dollar you repatriate to India, and you sold that to authorized person in exchange of rupees. Right? So as far as definition is as far as definition is concerned with respect to repatriation to India, so law has clearly specified that amount is repatriated to India, no contravention. But that amount is also, we will treat, this is the interpretation of this paragraph, like whatever amount you spend for in foreign exchange, you spend in foreign exchange for the purpose of settling of your liability, that amount will also be deemed to be repatriated to India. Means there is no default with respect to realization and repatriation of foreign exchange. Section 8 and 9 deal with the repatriation and realization of foreign exchange, right? This is the important part. Okay. I think so. Repatriation section 2Y, that is also clear, right? So definition third chart is clear, right? Is there any problem? Let me know. Section 1, we gone through the section 1 with definition 3 charts we completed. Is there any problem? These charts are available. I already uploaded the FEMA charts on ICAI portal only, right? So you can download from that. No issue at all. Okay, so this is the definition of foreign exchange. Means foreign currency and includes, first point, deposit, credits and balance payable in any foreign currency. Draft, traveler check, letter of credit, bills of exchange drawn in Indian currency, payable in foreign currency. Okay. Now, next point is reverse of that. Person drawn in foreign currency but payable in Indian currency. So that is foreign exchange definition. Foreign securities, okay. Foreign security 2O, okay. Person definition, same as income tax. Now, this is the most important definition. Okay. So now we are going towards this, the most important definition of FEMA and most interesting definition of FEMA. So that is called person resident in India. So if you all are agree, then we can start this definition. Kindly provide your answer in comment box. 2V stands for person resident in India. This is the most important. Little bit tricky, but I try to simplify as much as possible via charts. Okay, so can we start the definition of PRII? Kindly mention in the comment box. Can we start the definition of PRII? Most important and simple one. Can we start the definition of PRII? Can we start the definition of PRII? This is the most important definition of FMEA. Okay. Okay, let's start with the definition of PRII. Now, there's a definition under FEMA, and that definition I can call as a simplest form PRII. Person resident in India. Okay, let's start. So, person resident in India, suppose you are calculating or you are identifying that Mr. X is a person resident in India or not. So, for this, you need to fulfill two conditions. So, FEMA has prescribed two conditions with respect to that person resident in India definition part. Right? First point is, okay, where it is? Okay, there it is. Okay, so now we are going to start. First point. Mr. X is a person resident in India or not, then we need to identify two conditions. First point is that person is resided in India for more than 182 days in a previous financial year. Right? For more than 182 days in a previous financial year. This is the first condition. First condition is clear or not? 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 For identifying any person as a PRII, we just need to check previous financial year residence, whether he resided in India for 182 days. It is not necessary, it should be a continuous 182 days, right? Suppose, for example, in April, he resided for 20 days, in May for 5 days, in July for whole month, right? So that if we need to add this, and if that comes to more than 182 means 183 days, then we can call that person as a PRII with respect to first point. But right, but in the current year, that person gone outside India for three purposes, then we can call this person as a PROI. Then we can call such person as a PROI. This is clear or not? This is clear or not? So what is the definition of PRII? For claiming, for identifying any person as a PRI, we need to check two conditions. First condition is that he is a resident in India in the previous financial year for more than 182 days. Yes or no? If it is yes, then he is a PRI, but subject to fulfillment of second condition also. That if such person left India for employment outside India, business or vacation outside India, or for any other purpose for uncertain time period. Right? So in that case, he will be treated as a for that particular financial year, he will be treated as a person resident outside India. What if the person goes after spending 182 days? Yes, Udit, this is the case, right? Suppose, for example, in the financial year 1819, in the financial year 1819, we need to check for the financial year 1819. So for 1819, previous year is 1718, right? It is for 1718. So we need to check whether the Mr. X is resided for more than 182 days in 1718. If yes, then for first condition, he is a PRI. But if that person left India for three purposes: employment, business vacation, or uncertain time period of stay outside India, then in that case, in spite of fulfillment of first condition, he fails to fulfill the second condition, then he will be a person resident outside India. Means both conditions should be cumulative part, right? For example, if Mr. X goes for education other than three purposes, means if he goes for doing MBA from Cambridge University, right? Then that MBA will not falls under the employment part. MBA will not falls for the business vacation part. MBA will not fall for a uncertain any other purpose for uncertain period. For that particular financial year, he will be a person resident in India. So this is the answer, right? Hope so that is clear. Hope so that is clear. I think so that is clear. Right? Other than three purpose, then he will be a PRII. Now, to simplify this whole definition, that whole definition of 2.5, I just drawn this beautiful thing before you. First point is a person resided in India for more than 182 days during the course of preceding financial year, but now see the technicality of this definition, right? But does not include a person who has gone out of India or who stay out of India in either case, employment, business, vacation outside India for any other purpose. In such case, in such circumstances as would his intention to stay outside India. Yeah. Or a person who has come to stay in India for this purposes. If the person who has come to India for this purposes, then reverse of that situation means he will be treated as a PRII for any other purpose. Suppose that person wants to do MBA from Pune Symbiosis, then we will not treat such person as a PRII, then he will be treated as a PROI, reverse of that above point, right? So both are reversible point. Okay, so first point, we will understand. Okay, so if a person fulfills the 182 days in the first condition, plus if that person gone out of India or stay outside India for 1, 2, 3, then we will call as a PROI. For other than 3, then we can call as a PRII. Okay, if that person comes to India, stay in India, reverse case, for 1, 2, 3 purposes, then we can call as a reverse of that PRII for another purpose. If he wants to do an MBA from Pune Symbiosis, then we will call as a person resident outside India. I think so now it is perfectly clear. Okay, Udit, you are from Pune Symbiosis. Wow. Okay. Okay, so this is the concept behind section 2.5 with 2V with respect to PRII. Udit, it's merely a coincidental, right? Okay. Okay, I think so. Definition of PRII is clear, right? First point is we need to check previous financial year 182 days compliance or not. And if that person goes outside India for 3 cases, then we can call this person. Now I'm drawing by a green pen that we can call as a PROI. For any other than 3 objective, we can call as a PRII. If that person comes to stay in India for the 3 purposes, then reverse of that PRII and any other purpose is PROI. Abhilash, okay, now it is clear. Okay, so we need to clear that concept with respect to 182 days. 182 days. You can go through that definition or you can go through that chart also, that presentation also. So this is a case of individual. Any person or body corporate registered or incorporated in India that we can call as a person resident in India. Any office, branch, agency in India owned or controlled by a person resident outside India. Remember that office, branch, agency in India that is owned by or controlled by a person resident outside India, right? For example, Google or Flipkart, right? An office, branch, agency outside India owned by a person resident in India that also we can call as a person resident in India. I think so. Now it is all clear. Okay, let's read the module part. These notes are prepared from module, but I rearrange the section as per the simplicity. Okay, so person resident in India means a person residing in India for more than 182 days during the course of the preceding financial year, but does not include a person who has gone out of India or who stays out of India in either case 1, 2, 3. A person who has come to stay in India in either case, otherwise then 1, 2, 3, right? Any person, body corporate registered in India, and these both are reverse situations. Any office, branch, agency in India controlled by a person resident outside India, or branch agency outside India controlled by a person resident in India. Okay, so person resident outside India means a person who is not resident in India. Okay, now there is a definition called repatriate to India, means bringing the India the realized foreign exchange. You need to sell that foreign exchange to AP, or you can hold as specified by Reserve Bank of India. So this is the definition of security, and this is the least important definition of service, right? Now this is clear. Now we are going to see some questions with respect to person resident in India. Okay, so this is the definition of person as prescribed under the FMEA income tax. Okay, person resident in India means the following entity. First point, a person who resides in India for more than 182 days during the preceding financial year. Now, important point, the following person are not person resident in India, even though they may have resident in India, means you need to comply both the condition, first condition, second condition, then only that person will be treated as a PRII. A person who has gone stay outside India for any of the three purposes given below, or a person who has come to stay in India otherwise than for any of the three purposes given below, for taking up employment, for business or vocation, for any other purpose in such circumstances as was indicated, stay for uncertain time period. I think so that is clear, and this is chart for your reference. Right, I think so this is clear. And one more thing, under the FEMA, citizenship is not at all criteria for determining whether the person is a resident in India or not. Under the FERA, there is a concept of citizenship. Under the FEMA, they included the word residentialship. Now, there are three limbs in the definition. The first part prescribes the number of days stay. Then there are two limbs which are the exception to the first part. First part, it states that a person who is in India for more than 182 days in the preceding year will be a person resident in India. Okay, perfect. First condition. Thus, as a threshold or a basic level, one has to consider the period of stay in the preceding year. For example, if a person resided in India, now this is important for examination part. If a person resides in India for more than 182 days during the financial year 1819, for the financial year 1819, then for financial year 1920, the person will be Indian resident, obviously, because for 1920 previous year is 1819 and the person is resided more than 182 days in 1819. For financial year 1819, one will have to consider residence during the 1718 and so on. Accordingly, go to the backside. There are two exceptions provided in clause A, clause B. Clause A is for the person going out of India, clause B for the person coming to India. Exception carve out the situation that do not fall under the main body of the section, even though they satisfy the criteria. This means that even if a person is an Indian resident based on the test provided in the first limb, the person will be a person resident outside India if he falls. Correct. So we need to comply. We need to comply both the conditions. Suppose, for example, in the previous financial year, person resided for more than 182 days and he gone out of India for other than 3 reasons. Then only we can call that person as a PRII. Clause A, second limb. It states that if a person leaves India in any of the 3 purposes we saw above, he will not be a PRII, he will be a PROI. Correct? It is if a person leaves India in any of the 3 purposes, means that person is a previous year, but he leaves India for 3 purposes, then he will be a PROI. I think so. This is clear. Thus, in the example given for the first limb above, if a person leaves India on 1st November 2019, he will be a non-resident from 2nd November 2019, even though his number of days in India was more than 182 days in the financial year 1819. Similarly, if a person if a person goes or stay out of India for carrying on any business, he will be a PROI, obviously, right? That from that date. So for financial year 1920, the person will be PRI till this date. He will then be a PROI. From 1st April 2020, the person will continue to be the PROI as long as he stay along with his employment. Okay. So an example for clause B can be a person who has a green card in the USA. The green card entitles a person to stay in the US and eventually become the US citizen. If a person goes abroad and starts studying in the USA, he will be a non-resident from that date as he stay abroad indicate that he is going to stay there for an uncertain time period. Clause B, third limb. This is a complex case as first limb read with the third limb has 2 exceptions. Means you need to remember that both the cases fall under the definition of. So if you want to prove such person is a PRII, then you need to comply both the conditions, right? This is the important point. And these are the different examples as prescribed for the better clarity of this. Okay. So this is the definition of, these are the corporate example. Toy Limited is a Japanese company having several businesses units all over the world. It is a robotic unit which is a headquarter in Mumbai. Headquarter is Mumbai. And as a branch in Singapore. The headquarter Mumbai controls the Singapore branch. Then what is the status of Singapore branch? That is also called as a PRII. Correct? Singapore branch is a PRII. Question 5, example 5. Example 5 belongs to air hostess case. Okay, so for basic funda is very clear. For section 2.5, you need to remember this point. Udit, with respect to pandemic, I think so they have not modified or they have not provided any kind of relaxation with respect to residential status in the FEMA. Okay, so this is the basic funda behind definition 2V of the PRII. Okay. So I think so now this definition is very much clear. You can note down that chart, or you already own this chart, right? So you can just go through that chart and you can solve any of the question with respect to PRII definition part. So is there any doubt with respect to PRII definition? Is there any doubt with respect to PRII definition? Or this is clear? Is there any doubt? Is there any doubt with respect to PRI definition? Or it is clear? Or it is clear? Is there any doubt with respect to PRII definition, or it is clear? So that we can move forward. For calculating PRI status, we need to check the two concepts. First is previous year funda, like the person is a person resident in India in the previous financial year, plus if he gone out of India for other than 3 purposes, then only we can call such person as a PRII. Otherwise, he will be a PROI in spite of this fact that he fulfilled the first criteria, first limb or first condition. Okay, is there any doubt? Is there any doubt? All clear, perfect. Okay. Now, now moving forward. There is a section 3, right? So we completed section 1, we completed section 2. Now moving towards the section 3. And section 3 is pure theoretical part. Dealing in foreign exchange or foreign security. Dealing in foreign exchange or foreign securities. Okay. So section 3, restrictions on dealing in foreign exchange, foreign security. No person. So they have provided 4 parts. First is deal. A. No person shall. You need to remember that point. You need to remember that point. You need to remember that point, right? No person shall deal in or transfer any foreign exchange or security to any person not being an authorized person, right? No person shall deal in or transfer any foreign exchange or yes, it's more than 182 days. Right, so it starts, that provision starts with the negative sense, means you need to enter, you need to deal, or you need to transfer anything with respect to only authorized person only, right? Not being authorized directly, it is not allowed. No person shall making any payment to or for the order of any person resident outside India in any manner. Third, no person shall receive other than the authorized person any payment by order or on behalf of any person resident outside India held in any manner. Fourth, or no person shall enter into financial transaction in India for the purpose of acquisition or creation of any assets outside India by any person. So these are the 4 points, and this 4 points, they covered each and every aspect, and they have clearly mentioned that whatever transaction you need to enter, you need to enter through the AP only, authorized person only, right? So first point talks about the dealing or transfer of any foreign exchange. Second point, I need to make a payment to anybody. Third point, I need to receive some amount from other than from anyone. And last point is acquisition of any property. Relaxation in restrictions. All the restrictions mentioned under section 3 may be relaxed in the following manner: by making a provision to the effect in the act or in the rules and regulations, by the general or special permission of Reserve Bank of India, right? This is the basic funda with respect to dealing in foreign exchange or foreign security, right? This is the basic funda, section 3. So, section 3 from theory notes, dealing in foreign exchange, no person shall deal in transfer any foreign exchange or foreign security to any person not being an authorized person. First point, no person shall make any payment to or for the credit of any person resident outside India in any manner. Third, receives otherwise than through an AP any payment by order or on behalf of a person resident outside India in any manner. So these are the first 3 points. Explanation. For the purpose of this clause, where a person in or resident in India receives any payment by order on behalf of any person resident outside India through any other person, including an AP, without a corresponding inward remittance, means whatever amount you are receiving, you need to prove by any document. Then such person shall be deemed to have received such payment otherwise than through an AP. Or enter any financial transaction. Now, what is the meaning of financial transactions? So they have specified explanation for that. For the purpose of this clause, financial transaction means making any payment to or for the credit of any person or receiving any payment for by order or on behalf of the any person, drawing, issuing, negotiating any bill of exchange, promissory note, transferring any security, acknowledging any debt. Now, example. The section imposes blanket restrictions on the specified transaction. Means section completely frees out, like you need not to enter any transaction of dealing, receiving, making any payment or any financial transaction other than authorized person. If you want to do that transaction, you need to enter with the authorized person only. Consider following examples. First point. Example pertaining to clause A, dealing in foreign exchange. A PROI comes to India and would like to sell US dollar 1000 to his friend who is a resident in India. The friend offer him a better rate than the banks. Whatever rate is provided by the foreign banks, that is by the banks in the foreign currency, that friend is providing better one. This cannot be done. It would amount to contravention of section 3. If you want to enter such transaction, enter with the AP only. B. A PRO has an insurance policy in India. He requests his brother in India to pay the insurance premium. This will amount to payment for the credit of non-resident. This is not permitted. Third, a foreign tourist comes to India, takes food at the restaurant. He would like to pay US dollar 20 cash to the restaurant. The restaurant cannot accept cash as it will be a receipt, otherwise than through the AP. सब कुछ होता है, right? Whatever is done, the restaurant will have to take a money changer license to accept the foreign currency. And D, transaction covered by this subsection are known as a hawala transaction. An Indian resident gives rupees 70,000 in cash to the Indian dealer. For this transaction, the brother in Dubai will get US dollar 1000 for a Dubai dealer. The two dealer may settle the transaction later. However, the transaction is not permitted. This is the important point. I think so. Section 3 is clear, and section 3 is more of a restriction kind of. It specifically restrict. Like if you want to enter any kind of transaction, enter only with respect to AP only. Is there any problem in section 3? Is there any problem in section 3? Is there any problem in section 3? Section 1 talks about the applicability part and enforcement part. Section 2 prescribes some kind of important definitions part. So whatever definitions are important, we already gone through the definition part. And section 3 talks about the restrictions part. So is there any problem in section 3? Is there any problem in section 3? Or it's all clear? I think so. Is there any problem? No problem. All clear, all clear, all clear. Okay. Okay. So there is a section for little section, small section. Holding of foreign exchange, except as provided in this act, no person resident in India shall acquire, hold, own, possess, or transfer any foreign exchange, foreign security, or any immovable property situated outside India. This section prevents Indian resident to acquire, hold, own, possess, or transfer any foreign exchange, security, immovable property abroad. Then through separate notification, acquisition of these assets have been permitted subject to some conditions. You can acquire that property provided other condition you need to comply. Okay. So this is section 4. This is section 4. Okay. Now, now start the main section. That is called section 5. And section 5 talks about the current account transactions. So now start the section 5. And section 5 talks about the current account transaction. And remember one thing, in the FMEA, they will ask a question from PRII definition, first important topic. Next is current account transaction, section 5. Right? Okay. So definition we already discussed. What is current account transaction? So current account transaction is a transaction which is not a capital account transaction. This is the first point with respect to the definition part. 4 things are part of a current account transaction: short-term banking, interest on loan, income from investment, remittance for living expenses of parents, or traveling, right, purpose. So definition we already discussed, section 5, that is called current account transaction. Section 5, dealing in current account transaction, drawal means withdraw. So withdrawal of foreign exchange means withdraw from authorized person. You withdraw from authorized person means section 10. Opening of letter of credit in favor of other person. Use of international credit card, debit card, ATM card, which has an effect of creating a foreign exchange liability. What you will create? You will create a foreign exchange liability. Now, current account transaction, central government has framed the rules and divided into 3 categories, right? So what central government done? They have divided all the category into 3 types. First, there's a list of 8 transactions is prohibited, right? You need to remember when these are the most important part with respect to examination. Transactions with foreign exchanges is specifically prohibited. So these are 8 transactions, right? Transaction for which foreign exchange can be drawn with the approval of central government, and there are certain transactions for which limit is prescribed and that you can enter with respect to the approval of Reserve Bank of India, right? So what they have done for the current account transaction, we gone through the definition prescribed, right? 2J, if you can recall the definition section of current account transaction, and central government is divided into all 3 types of current account transaction into 3 categories. First, schedule prescribes certain transactions which are specifically prohibited. Second, schedule prescribes approximately 10 to 11 type of transactions which you can enter with the approval of central government. And third type of transaction, there's a limit prescribed of $2.5 lakh, $2.5 lakhs, right? For which there's a limit prescribed and that you can enter with the approval of Reserve Bank of India. Okay, now start one by one. Rules on current account transaction. The central government has framed foreign exchange management current account transaction rules 2000. As per these rules, the current account transaction have been divided into 3 categories. First, transaction for which drawal of foreign exchange is explicitly prohibited. So these are the transactions. Okay. Second, you can enter certain transaction, but for this you need to remember, you need to take the approval of central government. Third, you can enter certain transaction, you need to take the approval of RBI. Transaction for which withdrawal of foreign exchange is prohibited, right? So now this is this line. Okay. First point is remittance out of income from, suppose for example, you played IPL lottery income in India, lottery income, racing, riding income, any other hobby income, and you earned, you by God grace, you earned, for example, 1 crore rupees in lottery income or horsing and riding, right? So law has clearly specified you are not supposed to remit that lottery income outside India. You need to spend that amount in India only. Second, remittance for purchase of, you want to purchase some lottery tickets or banned or prescribed magazines, football pools, sweepstakes, right? You need to buy some lottery tickets or some banned magazines, prescribed magazines. Law has prescribed we will not allow any kind of foreign exchange to execute such transactions. Third point important, you need to pay the commission. And on exports, you are exporting something, for that you are providing some kind of commission, and that exports you are providing under, there's a scheme called rupee state credit route scheme, except payment of commission up to 10% of invoice value export of tea. So export of tea, 10% commission is allowed, but rest of the, if you are exporting something under that scheme, so that is not allowed. We are not providing any kind of foreign exchange to make any payment for commission if you are exporting something under that scheme. And what is a rupee state credit route scheme? This is the earlier story. Like India entered an agreement with the Russia, and Russia at the time they have lent some amount to the Indian persons, and they have there is an agreement that India will export certain percentage of its total export to Russia only. So if you are exporting some amount of export due to this agreement, then you are not allowed to provide any kind of commission over this. Payment of commission on export made toward equity investment in joint venture, wholly owned subsidiaries abroad, we are not allowed. Remittance of dividend to whom dividend balancing is applicable. Dividend balancing means you are getting some dividend from foreign and you need to pay some dividend to her. So that is called dividend balancing. First, you need to adjust. Okay. Payment related to callback services. Suppose, for example, payment related to Miss Rosie called to Mohan, and when Miss Rosie called to Mohan, right? Mohan is an Indian person. Rosie is an outside India, Australian person, right? And after the talk of, say, for example, 1 hour or 2 hour or 3 hour, the bill is paid. The bill is supposed to be paid by Mohan. So law is clearly specified. We will not provide any kind of foreign exchange for that particular transaction. That is called call back services. कॉल कोई करता है, पेमेंट किसी को देना है, लॉ ने बोला इश्क लड़ाने के लिए हम पैसा नहीं देते. Okay, 7th point, remittance of interest income on fund held in non-resident special rupee account, that is also not permitted. So this is the basically, these are the transactions which are law, these kind of transactions, right? So this is important part. Okay, so we completed rule 3, schedule 1 prescribes the certain transactions which are specifically prohibited as far as capital account transactions are concerned. So it's 8:29 in the clock. We will take a 10 minutes break and we will back by 8:40 in the clock. Okay. So till then, if you have doubt, you can mention in the chat box. So we are going to take a break of 10 minutes. Start. Voice is perfect. Voice is perfect. Audio, video. Kindly comment in the chat box. Voice is perfect. Audio, video is perfect. So we can start further. Udit, it is illegal to transact with any foreigner who is not. Yes, yes. A person who is not is authorized. You cannot enter with any transaction with such person. Can we start further? Voice is perfect. Audio, video is clear. So that we can start the rule 4, second schedule. Can we start? Voice is clear. Can we start? Okay, fine. Udit, now voice, audio, video, everything is perfect, right? Okay, so we are going to start the new concept and the new schedule, we can say. So like, okay, so transaction permissible with the approval of central government, right? So you need to remember now what the examiner will do. They will just club out. They will club schedule 1, schedule 2, schedule 3 transactions in a single question, and they will ask which transaction is permissible with the approval of central government, which transaction is permissible with the approval of Reserve Bank, or which are prohibited transaction. So you need to classify, you need to learn that transaction from that schedule part, and you need to learn that transactions, right, by name and by schedule name also. Okay, transaction permissible with the approval of central government, right? First point, remittance of freight of vessel chartered by any public sector undertaking. Means if any public sector undertaking took a vessel means a ship, malwahak jahaj, right? On freight, for that you need to pay the foreign exchange. You can pay, no issues at all. You need to take the approval of central government. First point. Multimodal transport operator making remittance to their agents abroad. Remittance of container detention charges exceeding the rate prescribed by the Director General of Shipping. That for that you need to take the approval of central government. Now, suppose for example, if Vilash yaar. Okay, suppose for example, if we need to make a advertisement in a print media outside India, right? For this, we need to take the approval of central government. So they have provided a certain limit, like up to $10,000. Up to $10,000, you need not to take the approval of central government. And suppose if you want to make make expenditure of $11,000, for that remaining $1,000, you need to take the approval of central government before remitting such amount. Now, advertisement in foreign print media by state government or its PSUs exceeding $10,000, exceptions are there. Exception means no restriction if it is that expenditure that, for example, you make a investment, you make a advertisement in America, like वो अमिताभ बच्चन का एड एंड एक बार तो गुजारो गुजरात में क्या है वो कंसेप्ट, राइट? तो वो वाला चीज है, लाइक टूरिज्म प्रमोशन है or foreign investment or international bidding. For the 3 types of purposes, this is exception. You need not to take any approval from any central government, right? So first point is remittance of freight vessel chartered by any PSU. Multi-modal transport operator means the transport company which are operating in different parts of the country, means MNC transport company, we can say in a single word, that is permissible. Container detention charges, you are paying the charges more than the rate prescribed by the Director General of Shipping, then you need to take the approval of central government. Fourth point, you need to make any advertisement in the foreign print media. So the law is prescribed for that up to $10,000, no restriction, no approval required. More than $10,000, you need to take the approval of central government. But then too, there are exceptions. If you are making any advertisement for the purpose of promoting the tourism, foreign investment, international bidding, then this is the case. Fifth point, payment of import through ocean transport government department or a PSU on a CIF basis, cost insurance freight basis allowed hai. Remittance of prize money, sponsorship of sports activity abroad exceeding US dollar $1 lakh, this is allowed. More than 1 lakh, you need to take the approval of central government. Exceptions are no restriction if payment is made by international level sports body ICC or national level sports body, state level sports body. These all will fall under the exception part. Up to $1 lakh, no problem. Remittance of hiring charges of transponder by TV channels, ISP, internet service provider. International bidding means for any specific contract. Perfect. Contractor, right? Remittance, cultural tours, and remittance for membership of P&I. P&I stands for Protection and Indemnity Insurance Club. For this, you need to, if you want to make any expenditure for this purpose, you need to take the approval of central government before doing this. But no approval of central government is required where the payment is made out of the fund held in the RFC account. Means your bank account. If you are expending that amount from your own bank account, then no need to take any approval. Acceptance, except for remittance for the membership of P&I club. Right? RFC account or exchange, EEFC means exchange earner foreign currency account. So law has clearly specified, like if you are spending that amount from your two account, RFC account, resident foreign currency account, exchange earner foreign currency account, EEFC account, then this approval is not required. But P&I, Protection and Indemnity Insurance Club, if you are paying membership of that club, for this RFC and EFC is not allowed. Okay. So this is our second schedule. So first schedule prescribes, prohibits 7 to 8 types of item for this purpose of foreign exchange, and second schedule prescribes the central government approval. Now, third schedule, earlier, I think so before 2 years, that schedule is quite important kind of thing in the examination part, because for every transaction, there is a different limits. So examiner will ask a separate question from this part. But before 2 years, after 2 years, they have made an amendment part and they provide a composite limit. So now this is simplest topic. What they have mentioned, schedule third, rule 5 makes the following provision in this regard, and that is divided into two parts: facility for individuals and facility for corporates. Right? Facility for individuals and facility for others. Now, first point, individuals can avail, just a minute, I need to make little bit, okay, visible. Okay. So individuals can avail of foreign exchange facility for the following purposes within the limit of, now they have prescribed a limit of 2.5 lakhs dollar, referred to as a LRS, liberalized remittance scheme. An additional remittance in excess of 2.5 lakh dollar for the following purposes shall require approval of the means 1, 2, 3, 4, 5, 6. If you are expending any amount on this 9 items, for this you can invest up to, you can expend up to 2.5 lakh dollars. And suppose, for example, you require 3 lakh dollars, for above of 2.5 lakhs, you need to take the approval of Reserve Bank of India. Now this is clear. First point, If you are visiting to any country except Nepal and Bhutan, right? You want to gift or donate something, going abroad for employment, immigration any country, maintenance of close relative abroad, travel for business, attending a conference or specialized training, or for meeting expenses of medical care, treatment, checkup abroad, or for accompanying as attendant to a patient going abroad for medical treatment, expenses in connection with the medical treatment abroad, studies abroad, any other current account transaction. So if you are entering any kind of current account transaction as prescribed in Schedule 3rd, Rule 5, facility for individual, so law has clearly specified under the FEMA that 2.5 lakh is the overall limit. Means you can spend only this item 2.5 lakhs, no issues at all, or you can spend by composite 2.5 lakh dollars, no problem at all, right? This is the simplest part. However, for the purpose mentioned as item number 4, item number 7 and item number 8, means we can highlight via green this point, immigration part, expenses of medical treatment abroad and studies abroad. An individual may draw the foreign exchange exceeding 2.5 lakh if it is so required by the country of immigration. Means by the country of immigration, you want to settle in the London, and London is the most expensive country, right? So you need more money. For more money, so law has Nepal and Bhutan. Why there is an exception? Because Indian currency is also acceptable, right? Easily. By the country of immigration, medical institute offering the medical treatment or the university respectively. Suppose, for example, you took an admission in the Harvard University, right? And there is a fees of, so for example, $5 lakh. So you can take the estimate of from this Harvard University, you can present to the government. You need not to take the approval. You can just pay that amount. If an individual remit any amount under the LRS in any financial year, then the applicable limit for such individual would reduce from 2.5 lakhs by the amount so remitted. Now, there is a little bit different point. A person who is a resident but not permanently resident in India and is a citizen of foreign state other than Pakistan, specifically excluded, or is a citizen of India who is on deputation to the office or branch of a foreign company or subsidiary or joint venture in India of such foreign company, may make remittance out up to his net salary. You can remit up to your net salary. After deduction of taxes, contribution to PF, means statutory deductions you can exclude. So for this, that person means the person is a resident but not permanently resident in India, right? In that case, that person is provided a little bit relaxation, little bit different kind of limit. You can remit up to your salary limit, net salary. For the purpose of this item, a person resident in India on account of his employment or deputation of a specified duration, irrespective of length thereof, or for a specific job or assignment, the duration of which does not exceed 1 year, is a resident of person but not permanently resident in India. And this is the concept of LRS. Okay. Now, so we gone through the Rule 5, Schedule 3rd, talks about the facility for individual. There's a upper capping limit of 2.5 lakh for 9 kind of transaction per financial year, right? Again, facility for individual, the following remittance by person other than individual shall require prior approval. First point. Now, donation exceeding. Suppose Reliance wants to donation exceeding 1% of foreign exchange earning during the 3 preceding financial year, or USD 50 lakhs, 1 tens 100, 1000, 10,000, 1 lakh, 10 lakh, 50 lakhs, whichever is less for. Now, if a Reliance wants to make a donation and Reliance is earning a donation exceeding how much donation you want, that you are earning 1% and you are donating more than this one, for 50 lakh, whichever is lower, for creation of chairs in a reputed educational institute, contribution to fund not being an investment fund promoted by education institute, and contribution to a technical institution, body or association in the field of activity of donor company. Lone bola, whatever you want to make a donation, and this is creation of chair. It does not mean that you are making a chair or you are providing some kind of plastic chair or wooden chair. No, it's a kind of donation reserved seat, right? For this, you are holding some right. Okay. Second point. Commission per transaction to an agent abroad for sale of residential flat plots in India. Right? You have a plot. Commission per transaction to agents abroad for sale of residential flat or commercial plot in India exceeding $25,000 or 5% of the inward remittance, whichever is more. You want to spend more amount, then you need to take the approval of RBI. Remittance exceeding $1 crore per project for any consultancy services in respect of infrastructure projects, and $10 lakhs per project for any other consultancy services procured from outside India. Remittance exceeding 5% of the investment. Remittance exceeding 5% of the investment brought into India, or $1 lakh, whichever is higher, by an entity in India by way of reimbursement of pre-incorporation expenses. So that is also permissible. Means whatever amount you want to donate more than this limit, then for this you need to take the approval of Reserve Bank of India. No approval is required if you are providing that amount from your RFC account. Now, this is our what we can say current account transaction limit, right? So this is current account transaction. This is the definition of current account transaction. These are the examples. Okay, these are the schedules. Its first schedules means prohibited transactions. Second is schedules with the approval of central government. Department specified. Limit 10,000 is specified. 1 lakh is specified. Now, third is approval of Reserve Bank of India. So for these 9 types of transaction, limit is $2.5 lakhs. And for other than individual, there is a separate limit prescribed for corporates. So if you have any doubt till that, okay. Till that paragraph, if you have any doubt, you can ask your doubts with respect to section 5, along with schedules. If you have any doubt, you can ask your doubt. Section 5. Section 5. There are few more points. Few more points in theory part. The procedure for drawal remittance of any foreign exchange under this schedule, same as applicable to LRS. If any transaction is not listed in any of the above 3 schedules, then this is freely available without any approval. Exemption for remittance from RFC account. No approval is required if you want to make a donation or expenses from your RFC account. EFC account, everything is allowed, no issues at all. But there are 2 things: remittance for membership of PNI club, that is not allowed, right? Commission per transaction to agent abroad for sale of residential flat or commercial plot in India exceeding 25,000 or 5% of the inward remittance, whichever is more. So that is not allowed. Exemption for payment of international credit card. Okay. International credit card limit, then it is allowed, no issue at all. LRS scheme limit applicable from April to March, $2.5 lakhs. In case of a remitter being a minor, the LRS declaration must be countersigned by the guardians. Consolidation of remittance of family member. Remittance under the scheme can be consolidated in respect of family member subject to individual family member complying with the terms and condition. Exception: clubbing is not permitted by any other family member for capital account transaction. Okay, so Udit, no doubt. Okay, so is there any doubt in section 5? If you have any doubt with respect to any of the schedule, with respect to any of the item, you can ask it out. Remember one thing, without going through the current account transaction, don't try to enter in the examination, because this is the most important part. This is the most important part of FEMA. First, we will complete whole sections of FEMA as applicable in our syllabus. Then we will take out the this ODI part and what EFC account, ECB part, external commercial borrowing. Okay, is there any doubt? Is there any doubt, or we can move towards the section 6, capital account transactions part. Okay, so let's move towards the capital account transaction, and this is the simplest part, no issues at all. Okay. Okay. So capital account transaction, section 6 talks about the capital account transaction. Now, what are capital account transaction? Those transactions which affect our balance sheet part. Capital account transaction, section 6 is there. Definition of capital account transaction, section 2 we already discussed. Capital account transaction is broadly split into the following categories: Schedule 1, Schedule 2. Schedule 1 Regulation 3 is there, right? So it prescribes certain transactions which are entered by the person resident in India, right? Transactions made by a person resident in India is first point. Investment by a person resident in India. I want to make an investment in foreign security. That transaction will fall under the capital account transaction. First point. Foreign currency loan raised in India or abroad. Right. First point is investment by a. Any trick to remember all this transaction? Udit, for remembering this type of transaction, you need to revise a daily basis, at least 4 transaction, right? And don't revise at a stretch. Revise schedule by schedules. Like for example, today you are revising the prohibited transaction. Next day you are revising the central government approval, and next day you are revising the RBI approval. Then only you can remember these transactions. Okay, so transactions made by person resident in India, first point. Remember all the things. Whatever we are going to read in this transaction, that transaction will affect your balance sheet part. First is investment by a person resident in India in foreign security. Balance sheet part affecting. You are going to raise a loan in India or abroad by a person resident in India. That is also foreign currency loan in India you are raising or abroad. So that will affect your balance sheet. Transfer of immovable property outside India. By whom? By a person resident in India. So that is affecting your balance sheet item. Guarantee issued by a PRII in favor of PROI. Remember one thing, whenever you are entering in a FEMA transaction, there should be a one person in a resident in India, means in India, and the other person or the transaction is happening or the property is situated outside India. Export, import, holding of currency or currency notes, loan overdraft by a person resident in India from PROI, maintenance of foreign currency account in India or outside India by a person resident in India, taking out of insurance policy by a person resident in India from an insurance company outside India, loan overdraft payable by a PRII to a PROI, remittance outside India of a capital assets of a PRII. So these are the transactions which will hit your balance sheet part, and these transactions are entered by the person resident in India. Schedule 2. Regulation 3rd. Transaction made by the person resident outside India is investment in India by a person resident outside India. Transaction made by a person resident outside India is now investment is made by a person resident outside India, issue of securities by a body corporate or entity in India, or investment by a PROI means PROI obtained the securities of Reliance. Investment by way of contribution by a PROI to the capital of a firm proprietorship or an AOP in India. Same reverse of the earlier case, acquisition, trade of immovable property in India by a PROI means PR is going to invest, guarantee by a PROI in favor or benefit of the PRII, export, import of currency into or from India by a PROI, deposit between PRII and PROI, ICICI Bank India Limited, Mr. John, foreign currency account in India by a PROI, remittance outside India of a capital assets in India of a PROI, right? So this is the concept with respect to two transactions, Schedule 1, Schedule 3, Regulation 3. Now, certain transactions, there are no restriction. First point is transaction with no restriction. They are, first is for amortization of loan, means payment of loan installment, there is no restriction. Suppose, for example, my company obtained a loan from foreign bank and we are going to pay the installment part. So there is no restriction for that. For depreciation of direct investment in the ordinary course of business. Now, what is the example of this one? For example, if you entered any derivative contract, or if you entered any contract which depreciates by a flux of time, then in that case, you need to pay the premium part, or in case of derivative contract, you need to pay the margin part, right? So that margin, what you are paying, so that is not at all restricted. Transaction with no restriction. And there are certain transaction, capital account transaction as prescribed under Regulation 4. On certain transaction, the RBI imposes prohibition. No person shall undertake or sell or draw foreign exchange to or from any authorized person for capital account transaction, provided that a resident individual may draw from an authorized person foreign exchange not exceeding US dollar 2.5 lakh per financial year, or no part of the foreign exchange of USD 2.5 lakh shall be used for remittance directly, indirectly to the country notified as a non-cooperative countries or territories by FATF. FATF means in the Money Laundering Act, they have identified certain countries as a FATF, Financial Acts Task Force. This is the authority, right, which identify the certain Mauritius. From time to time, communicated by Reserve Bank of India to all concerned, right? And person resident outside India is prohibiting from making investment in any company, partnership firm, proprietary concern, or any entity, whether incorporated or not, which is engaged or proposed to engage in the business of chit fund. It is absolutely restricted. As a Nidhi company, Section 406, 406 of Companies Act 2013, right? In agriculture, plantation activity, in real estate, construction of farmhouse, in trading of TDR. TDR stands for Transferable Development Right. TDR means certificate issued in respect of category of land acquired for public purpose, either by central government, state government, in consideration of surrender of land by owner without monetary compensation, which are transferable in part or whole, right? So this is the overall concept of Section 6 with respect to capital account transaction. I think so. That is clear. In the theory part, this is the capital account transactions. That these transactions broadly outline the basics and whole concept, whole approach of the act. Basically, these transactions have to be understood as similar as to the concept of item relating to profit and loss or revenue account. Revenue account, profit loss account means current account transaction. Balance sheet item, capital item means capital account transaction. Now, transaction, capital account transaction, this is the definition part. 2E is the definition part. Okay. And these are the schedule part. Permissible capital account transaction. These are the transaction entered by PRII. Right? These are person transaction entered by PROI. If you can remember, these all transaction we already discussed, right? Transaction with no restriction, installment payment and depreciation of direct investment outside India. Right? And prohibited transaction is no one can invest in agriculture, chit fund business, nidhi company. So that all are restricted, right? TDR. So this is the concept of, okay, no person resident in India. This is the additional point. No person resident in India shall undertake any capital account transaction which is not permissible as per the order as amended from time to time Government of India, Ministry of External Affairs. किसके साथ में? With whom? With any person who is a citizen or resident of Democratic People Republic of Korea or any entity incorporated or otherwise in Democratic Republic of Korea until further orders, unless there is a specific approval from the central government to carry out the transactions, right? Whatever companies are dealing with them, if they take this specific approval, then they can sell their products in India. Otherwise, that is specifically restricted. The existing investment transaction with any person who is or a citizen or resident of Korea or any entity incorporated otherwise in the Korea or any existing representative office or the assets or possessed in Democratic Republic of Korea by a person resident in India, which is not permissible, you need to close that operations, liquidate, dispose, settle within a period of 180 days from the date of this notification, means April 1st, 2017. For this, you need to close that transaction. Okay. So with this, we completed the capital account transaction part. Is there any doubt with respect to section 6? Is there any problem with respect to section 6? Is there any problem with respect to section 6? Is there any problem with respect to section 6? Yes or no, so that we can move forward. Export of goods and services. Is there any problem with respect to section 6? Kindly comment in the chat box, or we can move further. No problem, all clear. Okay. Okay. So now there is a section called section 7, and this is also important concept. In fact, most topics are important in the FMEA itself, right? Now, and section 7 is quite easy also. Yeah. Section 7 talks about export of goods and services. First of all, there are 4 charts of export of goods and services. So export means what? Export means taking out of India to a place outside India of any goods, and this is the worst definition. We all know what is export, right? We are taking something from India to a place outside India, that is called export. So this is for goods, this is for service, means provision of services from India to outside India, that is called provision of services, means export. Okay, so this definition is not at all important as far as the examination are concerned. Now, Service means whatever service sector definition you can include in the definition, that all are included in the service part. Service means service of any description available to user, for example, banking, financing, insurance, transportation, dash, dash, dash. All activities will be covered under the service part. Now, RBI right over the exporter and export proceeds. So RBI right over the exporter and the export proceeds, right? Now, so RBI has clearly instructed you need to provide the declaration. Declaration by whom? By exporter. Correct particulars, what you are exporting. If full export value is not ascertained at the time of export, maybe there may be a possibility if you're dealing in such goods in which quality depends. So you are maybe that quality will be checked by the foreign entity and accordingly the rate will be prescribed. So what the law has specified? First, you need to disclose the correct particulars. But by chance, if you are not able to disclose the full export value at the time of export, but then too, exporter should specify the amount he is expected to be received by sale of goods. There should be some amount which you are thinking to get expected from this goods, right? So that amount you can mention. Maybe you can say, sir, this is the foreign entity. Foreign entity will do the valuation part, then accordingly rate will be determined and accordingly we will multiply in the kg part, something like that. So the law has specified, first of all, you need to mention the amount. If it is not possible, then you can reasonably expected the bare minimum amount you can mention. You need to furnish the information as required by RBI. Declaration by exporter of services shall give to the RBI payment made for such services. For example, a foreign entity approach you to create a website or an application, Android application or iOS application. So, an service sector, there's a huge difference of cost. I am filing a return at the rate of rupees 2000 and ENY and KPMG are filing a return of income tax return at the rate of 10,000 or 20,000 maybe. So there may be a different kind of valuation with respect to service sector, right? So law has clearly specified, like you will charge whatever amount you can from the foreign entity, but you paid a certain amount to some other person or you outsource that amount to some person. For that, the person charge 1 lakh rupees for the iOS developer, application developer. So that 1 lakh you need to mention. Issue of declaration by RBI. RBI issue direction. Full export value received without any undue delay, right? RBI has clearly specified, like you need to collect that amount as soon as possible you can. Realization repatriation of foreign exchange, that is export proceeds. Exporter takes reasonable steps. You need to take the reasonable steps to realize, to instant realize, and that amount should be repatriated to India. RBI को time नहीं लगता. As per the regulation reframe, and RBI ने बोल दिया, you are not supposed to do anything which provides delay in receipt of export proceeds or reduction of export proceeds. मतलब RBI is doing like a clear principle type of thing, like you are not supposed to do anything which provides a time lapse between delay in receipt of export proceeds or reduction of export proceeds. This is the first part. So first I'll provide definition part, definition of goods and services with respect to export, right? So goods means we are taking something from India to a place outside India, provision of services from India to a place outside India, that we can call as a goods part, right? Declaration, full export value you need. If you are not able to certain that full export value at the time of export, you can quote the minimum expected level. In case of services, whatever amount you paid for the services, that amount you can quote. Later on we will revise. Okay, and whatever amount you have received from this, that you need to realize and repatriate to India as soon as possible, without any delay, without any compromise with the quality, or without any restrictions. So this is the first chart of export of goods and services. Second chart. Requirements for making exports. A declaration shall be submitted by every exporter of goods and services. Export of goods any place outside India. Form of declaration, two types of form. The declaration form EDF shall be submitted in duplicate to the Commissioner of Custom, and soft text form in case of software, right? Soft text form you need to submit in case of software. Whenever you are doing any software export of software, then in that case the form will be softex, SOFTEX. The document should be submitted within 21 days from the date of export. You need to submit within 21 days. What are the exemptions from declaration as prescribed under Rule 4? Remember, Section 7 deals with the export and services. It consists of rules as prescribed by CG. Now, for below type of transaction, you are not supposed to provide any kind of declaration. First, trade sample of goods, publicity material supplied free of cost. No declaration required. Personal effect of travelers, whether accompanied or unaccompanied. No declaration required. Ship stores, transshipment cargo, goods supplied under the order of central government or of such officer as may be appointed by the central government in this behalf of any military, naval, air force authorities in India for military, naval or air force requirement. If you are providing any goods as a gift that they are not more than 5 lakh rupees in value, that is not allowed. Maximum 5 lakh. Aircraft engines, spare parts for overhauling or repair abroad subject to re-import within 6 months from the date of export. No declaration is required. Goods imported free of cost on re-export basis. No declaration is required. Replacement goods exported free of charge in accordance with the provision of FTP. Nothing is required. Goods sent outside India for testing subject to re-import into India. Nothing is required. Defective goods sent outside India for repair and re-import, provided that the goods are accompanied by the certificate from an authorized dealer in India and an export permitted by Reserve Bank of India. So for all these types of transaction, nothing, no declaration is required. You need to remember, examiner will ask a simple question from this Rule 4 only. He write down 5 to 7 transactions for which no declaration is required with respect to export of goods and services, Section 7 of the FMEA Act 1999. So these two charts, first talks about the declaration part, second talks about the document submission and free from declaration, exceptions of declaration. Now, IEC code. Indication of IEC code. The IEC number shall be indicated on the copies of declaration form, whether it's a SDF or soft text, submitted by the exporter to the specified authority, and that IEC number you need to use to all the correspondence of the exporter with the authorized declare or the RBI. Now, authority to whom declaration is to be furnished or the manner of dealing with the declaration. Declaration in form EDF, declaration in form soft text. It shall be submitted in duplicate. Duplicate means 2 copies to the Commissioner of Custom. He will verify the correctness of that document submitted and forward the original declaration to the nearest RBI office. Hand over the duplicate form to the exporter for submitted to the authorized dealer, Section 10 wala. With respect to soft text, in respect of export of computer software, audio, video, television software, you need to submit to the 3 copies to the designated officials or Ministry of IT, Government of India, as at the Software Technology Park or FT, Free Trade Zone, SEZ, Special Economic Zone. Certifying all the 3 copies of soft text form, the designated official shall forward the original directly to the office of RBI and duplicate retained for the record purpose, right? So this is the declaration part. Who is going to declare, and IEC part, import export code. Okay, goods and services chapter, chart 4. Period within which export value to be realized. This is the important point, 9 months. And extension is 15 months. In original case, the amount represents the full export value of goods, services, software exported shall be realized, repatriated to India within 9 months from the date of export. However, where the goods are exported to a warehouse established outside India with the RBI permission, then within 15 months from the date of shipment of goods. AD, AD means authorized dealer may extend the period of 9 months, 15 months if sufficient reasonable cause occurs. Where the export of goods, software, services have been made by unit in SEZ, status holder exporter, EOU, export oriented undertaking, ESTP, STP, BTP as defined in foreign trade policy, the amount shall be received repatriated to India. There is a simple time limit, 9 months, 15 months. 9 months is the basic time limit, which can be extended up to 15 months. Transfer of document. An authorized dealer may accept for negotiation or collection shipping bill, shipping document including invoice, bill of exchange covering export, provided that before accepting such document, he need to ensure that they should not be less than the value collection in the mean there should be a parity between the both the values. Right. So this is our goods and services export of goods and services discussion. You need to remember this whole 4 charts. Examiner will ask a simple theoretical kind of question on this topic. So is there any doubt in section 7? In first chart, definition part, declaration part. In second chart, requirement for making export, 2 form, SDF, EDF and soft tax. And rule 4 is important, exemption from declaration part. In next chart, IEC code number and authority to whom declaration shall be made. In 2 copies, 3 copies. And the last part, time period. Okay, so is there any doubt in section 7? 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 Let me know. From section 7, they may ask a 2 marks MCQ part also. Okay, we have a MCQs also, right? So they may ask a simple question like, what is the time period within which that amount should be realized, that amount should be repatriated? This is the basic topic. So 9 months is the basic and 15 months is the extended time period, right? Okay. So from theory notes, this is the export of goods and services. You need to declare full export value not at ascertainable at the time of export. Then you need to provide the expected value. You need to furnish the whole declaration to the RBI. Direction will be provided to the exporter by RBI, and you need to submit the document. And this is regulation rules. There is a definition of export, export value, form, software, specified authority. Declaration of export, full export value not ascertainable at the time of export, expected value. Okay, so this is the exemption part. Exemption part. Gift up to 5 lakhs, nothing is required. IEC number, you need to mention on all the copies. Authority to whom declaration, EDF and soft tax. Evidence in support of declaration, you need to provide the evidence in support of declaration. Manner of payment of export goods. Period within which normal time period is 9 months and within such time as specified by RBI. Extended is 15 months. Okay. and this is the transfer of document part. So this is all about the section 7. So section 7 talks about the export and goods and services. So till now we have gone through the FEMA. FEMA came into force on 1st June 2000. Before FEMA, there is an act called FERA 1973. Okay, FEMA section 1 talks about it applies to whole of India. It applies to whole of India. It applies to all the branches, offices, agencies located outside India, controlled by a person in India, and to any person who is committed in contravention to whom this act applies, that also applies, right? Then definition part. First is authorized person. Second is capital account transactions. Third is current account transactions, important definition. Right? Realization, repatriation, important definitions part. Then section 3 is not at all important, but then too you need to refer. Section 5 is most important, current account transaction, along with 3 schedules. First schedules prohibited transaction, 7 to 8 transaction. Then 9 transaction with respect to central government approval and RBI approval. There are 2 transactions. In fact, for individuals, other than individuals means corporate part. Okay, section 6 stands for capital account transactions. So again, there are 4 to 5 rules, 4 rules. Section 7 deals with goods and export of goods and services, right? Export of goods and services part. Okay. Now, now section 8 talks about the realization and repatriation of foreign exchange. Now remember one thing. In your study material, only one paragraph is considered, right? First we will complete from charts, then we will complete from this one. Okay. So section 8 deals with the realization and repatriation of foreign exchange. Where any amount of foreign exchange is due or has accrued to any person resident in India, he need to take such steps to realize, फटाफट पैसा लाओ और इंडिया के अंदर लाओ, repatriate to India such foreign exchange and refrain from doing. ऐसा कोई भी काम मत करना जिससे मिलने में डिले हो या रिड्यूस हो. Simple logic. Manner of repatriation: a person shall repatriate the same to India. You can sell that amount to AP, retain or hold it is account maintained with the AD in India to the extent specified by RBI. Use is for discharge of the liability denominated in foreign currency to the extent specified by RBI. Now, period for surrender of foreign realized foreign exchange. A person not being an individual resident in India shall sell their realized foreign exchange to a AP within a period of 7 days if foreign exchange due or accrued as remuneration for services rendered in India, outside India, and 90 days in all other cases. Remember one thing, if foreign exchange due or accrued as remuneration for services received in India, outside India, then the time period is 7 days, otherwise 90 days. Period of surrender of foreign exchange in certain cases. Any person not being an individual resident in India who has acquired or purchased foreign exchange and does not use for example, I took some foreign exchange for the purpose of medical treatment, but for example, I purchased or I bought 1 lakh foreign 1 lakh USD from RBI. I use 80,000 USD for the purpose of medical treatment. Remaining is 20,000. So law specified does not use for purpose, such purpose shall surrender within a period of 60 days from the date of his acquired or purchased by him. You need to remember the unused amount. Who acquired the foreign exchange for the purpose of foreign travel, then unspent balance of such foreign exchange surrender करना है within 90 days from the date of return of traveler to India is in the form of currency notes or coin. A PRII shall surrender any unused, unspent currency note, coin, traveler check within a period of 180 days from the date of its receipt. Right. So this is section 8, and in study material part, I thought that is not sufficient, so I have covered whole section 8 with regulation part. So realization, repatriation of foreign exchange. Foreign exchange is a common resource as a vital impact on the interest rates and inflation theory part. The fund belongs to the individual, but the equivalent foreign exchange belongs to the government of India. Again, theory part. Therefore, all the foreign exchange should be realized, repatriated, surrendered to the through AP. Permitted amount can be held as a currency as per the guideline issues from time to time. Where any amount of foreign exchange is due or has accrued to any person resident in India, such person shall take all reasonable steps to realize and repatriate as within such time period, whatever is the time period, whatever is the amount we already mentioned in section 8. Right. So basic time period is 7 days and 90 days that you need to remember. So is there any problem in section 8? 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 Or section 8 is clear? For a specific purpose, it's 60 days, 90 days, whatever amount you realize that you need to provide it in with respect to services and received, then 7 days and 90 days, right? There's a difference time. So section 8, is there any problem in section 8? Is there any problem in section 8? Okay. No problem, no problem. Okay. So from section 1 to section 8 we completed. Now, section 9 is also most important section because it talks about the exemption part. Exemption from realization, repayment in certain cases. Section number is 9. The provision of section 4 and 8 shall not apply to the following, namely, first point, possession of foreign currency, foreign coins by any person up to such limit as RBI may specify. RBI already provided exemption and you are possessing up to that limit. So there is an exemption part in section 9. First point. Second, foreign currency account held or operated by such person and that limit up to which RBI may specify, then there is no problem. Third point, foreign exchange acquired or received before 8th July 1947 or any income arising on which it is held outside India by any person, then there is no problem. Foreign exchange held by person resident in India up to such limit as the RBI may specify. If such foreign exchange was acquired by way of gift or inheritance, you can hold that amount, no issue at all. Foreign exchange acquired from employment, business, trade, vocation, service, that is no problem. Fifth amount. Sixth amount, such other receipts in foreign exchange, and seventh amount, RBI has specify, right? So these are the exemptions as provided. But what is the limit? Limit for this limit is not covered in your syllabus part, right? Limit in fact module part. Limit for possession or retention of foreign exchange. Possession without limit of foreign exchange, foreign coins by any person without any limit, foreign coins and foreign currency and coins by an authorized person within the scope of his authority. Retention by a PRI of not exceeding USD 2000. And that 2000 you acquired by him while on visit, that is visit to any place outside India by a payment of services not arising from any business authority done in India. Was acquired by him from a person resident outside India while on visit to India as a honorarium or service rendered. Was acquired by him by way of gift while on visit to any place outside India, or represent unspent amount of foreign exchange acquired by him from AP for travel abroad. That is permissible, right? So that is limit part, limit for possession or retention of foreign currency or foreign coins. Right? So this is section 9 part. Exemption from realizing or repatriation in certain cases. The provision of section 5 and 8 shall not apply to the following, namely, first, possession of foreign coins, currency coins by any person up to such limit prescribed by RBI. B point, foreign currency account held or operated by such person or class of persons or the limit up to which RBI may specify. Third, foreign exchange acquired or received before 8th day of, means you are holding that amount before that date, or any income arising or occurring thereon which is held outside India by any person in pursuance of the general or special permission granted by RBI. Foreign exchange held by a person resident in India up to such limit as the RBI may specify if such foreign exchange was acquired by way of gift, inheritance from the person referred to in clause C, including any income arising from this also. Foreign exchange acquired from employment, business, trade, vocation, services, honorarium, gift, inheritance, or any legitimate means. Such other receipts in foreign exchange as the RBI may specify, right? So this is overall section number 9. So is there any problem in section 9? Is there any problem in section 9? You all are getting FMEA or not? Is there any problem in section 9? It provides the exemption part. Is there any problem in section 9? Udit, okay, you explain very well. Okay, so section 1, let's have a what we can say recap of the what we have done. So section 1 talks about the applicability part. FMEA applies to whole of India. First point, FMEA applies to all the branches, offices, agencies that are situated outside India to a place controlled, owned by person resident in India, or FMEA applies to that person also who have committed any contravention outside India to whom this act applies. First chart. Second chart, definitions are there. First definition belongs to authorized person. Section 2C deals with the authorized person, 4 points, right? Authorized person, authorized dealer, money changer, offshore banking unit, any other person who is authorized by Reserve Bank of India, who is authorized by RBI as an authorized person under section 10 to deals with foreign security. What is the limit for maintaining foreign currency? Limit with whom? Limit with whom you are asking, right? For AP, there is no limit. depend on the capacity, means capacity in the sense means depend on the worth of the AP registration type. For individual, $2,000 coins. Okay. For okay AP for foreign security and foreign currency. Okay. Now, second definition was current account transaction. Current account transaction means any transaction which alter the assets, liabilities, contingent liabilities of a person resident in India, of a person resident outside India. Both are the cases, plus include certain transactions which are prescribed under Section 6. Then there was a new definition, and that called currency definition is not added. 2H is prescribed. Current account transaction, 4 points, most important definition, right? Then there is a definition of person resident in India. So you need to comply the two conditions. First condition talks about the more than 182 days in the previous financial year, and that person goes for outside India for 3 purposes, then he is a PROI, right? Other than 3 cases, PRI, and reverse of the situation applies when the person came into India. Okay. Now, next concept is Section 4. Section 4 deals with the basic part. Section 3, restrictions, dealing allowed, not allowed, payment not allowed, receipt not allowed, financial transaction not allowed for acquisition of any property. If you want to do any transaction, you can do with the AP only. Section 4, not at all important. Section 5, most important, current account transaction. Prescribe 3 schedules. First is prohibited transaction. Second is so whenever they quoted up to such limit, so up to such limit that is quoted, in the section of Section 8 or 9, so that is specified, like up to USD 2000 is allowed. Retention by PRIA. So that's why I have incorporated that regulation part in the charts, right? Because they have only mentioned like up to this limit, up to that font which RBI specified, but I have covered this one also. Okay. So Section 5 talks about the current account transaction, 3 types of schedules. Schedule 1, no limit is prescribed. Certain transactions, 7 to 8 transactions, which are strictly prohibited, right? Schedule 2 deals with the certain transaction for which CG approval is required. 2 types of limits are there. In case of advertisement, $10,000 print media, and in case of sponsorship, $1 lakh is present, right? Okay. For Section 3, Schedule 3, RBI approval. So they have divided the whole concept into 2 parts. First, transaction for individual, limit is $2.5 lakh for certain 9 type of expenses you can do, right? Immigration cover, employment cover, and all, right? Medical care and all. And for corporates, there are 4 to 5 points which deals with the specified different limits. Okay. Section 6 deals with the capital account transaction. A certain transaction needs to be entered by the PRII. Certain transaction can be entered by PROI. 2 transactions, no limit. Amortization of loan, depreciation, directly investment, and a certain transaction which is specifically prohibited. You are not supposed to invest in agriculture, expenditure fund, Nidhi company. Right? These are TDR, trading in TDR, right? Okay. Section 7, export of goods and services. 4 charts we have. Important is SDF form is there, Softex form for software, and 9-month and 15-month is the duration for realization, repatriation. Okay. Okay. Section 8 deals with the realization, repatriation. Section 9 deals with the exemption part. You are exempted from holding for such foreign exchange with yourself, right? Now, so this all we completed till now. So I think so we will not take up the Section 10. We will start Section 10 from next discussion on 18th of February, and we will proceed towards the next topics. So for the time being, you can revise whatever you have doubts till Section 9. You can ask your doubt firstly, or you can just comment your chat box. So I will try to respond all your doubts on this session or before the session also. Thanks a lot. If you have any doubt, you can just mention in your comment box. Thanks a lot.